What's going on, everyone, and welcome back to the Mortgage Heroes Podcast. I'm Brian.
I'm Will.
And today we have a real deal breakdown and what it actually takes to complete an investment project here in San Diego. And who else other than, our very own William Flores to walk us through his project.
I tell you, and I really appreciate, Brian, that we're actually going to talk about this, because the whole ADU rules with California is just like the whole golden age of things, like right back in the day where people were they found gold and it was the gold rush. I feel like now it's the ADU rush and more people should take advantage of it.
No, of course. And I love the fact that you yourself are going through the process. You yourself are doing it. So it's not coming from a secondhand opinion. It's real life. Like, you've done this, you're looking at this, the good, the bad. And I'm excited to get into all that because everybody thinks it's easy. Everybody thinks it's hard, but this is the real realities.
Yeah.
So,
and it's so true. That's why I lost a lot of my hair, as you guys can see. It wasn't just the haircut; it was just just losing it.
I was just saying it's a great haircut. But all right, let's get right into it. First off, right off the bat, I want to give people the understanding of, a quick snapshot of what was the project, why did you decide to get into this, and if someone drove through it before when you started, what has changed?
Oh my God, the thing's a monster now. So it all started with a single-family residence, 3-bedroom, 2-bath with a 2-car garage and attached patio cover. And what happened is a couple of years prior to taking possession of the property, my mother-in-law, that was her house. Mm-hmm. And that was her home for 44 years for my father-in-law and my mother-in-law. And so I built an ADU saying, hey, you know what? You're in Chula Vista. It takes us like 20 minutes to get over there. Why don't you guys just come over here? I can build an ADU and call it a day.
Yeah.
And then we could put your house on the market and figure things out. So we completed the ADU in my house. It was a 1-bedroom, 1-bath, and I want to say it's about 600 plus square feet. And they loved it.
Yeah.
Brian, I thought they were going to be like, wait a minute, I'm in a 1,200 square foot home. Yeah, I have a yard, I have everything. Like, this is great. It works out great. And for my father-in-law, who loved walking around, I say love because he passed away. It's going to be almost 2 years now. Thanks, Dad, for allowing me to do what I did with your home. But it was, he enjoyed it. And so I was like, wait a minute, I think we're onto something here. Mm. So then at that same time, I became a Pace Morby. I follow him. So I became a Pace Morby member or
Sub-2
community person. That's when I heard the word subject to.
Mm-hmm.
So I'm like, wait a minute, subject to, like, how do we go with that? And how do we do all this stuff? And so obviously you have to do your research. And when you're with a great community like that, they'll help you. They guide you through the process. So I told Mom, like, hey, Mom, you're going to put your house on the market. You're going to put it for $720, $730. Why don't I just buy it from you?
Yeah.
Through a subject to. Do you really need your money right now? And so luckily I have great in-laws. She's like, I don't need that. I have a home right now. So take it subject to. And what it is they have a VA loan for $150,000 at a 2% or 2.25%. So I was like, well, can I take that over? And then let me just assume responsibility. And then what I'll do is, well, if you get $720, let's just discount the 6% that you would probably pay for a realtor fee. So I'll buy it for $680. And that's how it went, and that's how it all started.
Wow. Well, I mean, what a process, from one ADU. And I feel like that's how it happens. You start one, you do one, and you're like, well, I'm already here. What do I do next? But one of the things I wanted to clarify is, so for people that don't understand, subject to. So subject to is essentially when you take over a property that the seller is still liable for the mortgage, or they're still on the mortgage, but they say, hey, if you're willing to cover the payments, or if you're willing to make a deal with me X amount, whatever, like you did, are we willing to stay on and basically do like a seller carry for you to get in the property, keep that lower rate or keep that payment and do whatever it is you have to do. Meanwhile, you wait forever that deal, how to say it, that end deal that where you're going to basically pay off.
No, and I'm glad. Yeah, it's very similar to a seller carryback.
Yeah.
And in this way, I never knew this, but a lot of people even sold their businesses subject to. So you're kind of taking possession what the current debt is, and you're paying that off. And so what it is, you have to work out a negotiation. So the negotiation was, Mom, I give you $100,000 up front. Mm-hmm. Let me take possession of the property. I'm going to rent it. So I get to keep the rent and make the payment. I just have to make sure that I'm making the payments on time. And this is a contractual agreement. Okay. We put in a residential purchase agreement here in California, and it states, with the seller financing addendum that we put the specifics right there of who's going to be responsible for what. So we're responsible for the homeowner's insurance, making sure that if the tenants wreck the property, anything, all liabilities come to us. Okay. And so I worked out the deal that in 3 years, when we complete the ADU project, I buy her out. And in this case, what I decided to do, since it's in the family, we created a trust instead and put everything in the trust. And so we were able to obtain, well, I don't want to fast forward all of it, but
No, I love that, and it's about getting creative, and that was one of the biggest things that after 2020 we started seeing a lot of creativity in the market. We started seeing a lot of different type of investments being taken down. So I love the creativity, and from one thing that I got is that it's not easy. It may not be easy, but it's definitely doable, and it's not impossible. But it may not be as smooth as people think. But if you have a good understanding of what you're doing, like you have a proven method here.
Yeah.
So we got the vision. That was great. Thank you for taking us through all that. Now let's actually break down the numbers, get into the real nitty gritty of the deal, and really look at it behind the scenes and what really happened. To make this truly a real life project.
Well, one of your questions was, what was your original plan? The original plan was I didn't understand what we wanted to do, and this is new territory for me. So this is going to be one of the biggest transactions, building transactions that I've done. The other ones, it's like you're adding to an existing one-car garage, et cetera. That was my ADU that I've done. And this time it was just the garage. I was going to convert the 2-car garage with the existing patio cover into a 2-bedroom, 1-bath ADU. And so who really helps give you the proper vision for this is going to be your architect, the designer. And I call it a designer because a lot of people think you need to have an architect. In California, you don't. As long as you're not going into the commercial world of territory, then you're not required to be an architect. So a designer's good enough.
Okay, nice.
And so I did hire Omar. Kudos to and props to Omar Beltran with Sprawl Design. He helped me really create the vision with this. And he's all like, well, this is what we can do. This is what we can't do. And this is what we should do.
Oh, I like that.
And so I was like, oh, okay. I thought I was going to build in front of the house. He's like, nope, there's just certain reasons why you can't, And so I was like, oh, this is perfect.
Yeah.
Like, thank you. And then one thing with Omar, he actually works for the county of San Diego as a home inspector already. People that are going through the whole building process, he goes and makes sure that everything's up to code, that everything's going to pass inspection. So I'm like, who better to have in your corner than this guy that already understands that?
No, that's awesome. And one of the things that I will highlight is that, who you put on your team is definitely a make you or break you. And who you pass that baton on to better be able to take it to the next level and then to the next so that you guys all get through the finish line and finish the race together.
Yes, that's correct.
So what did you think was going to happen versus what actually happened? Obviously there's always theory, hey, this is the plan. But, in these types of situations, there's so many moving parts. There's so many different variables. What did you have in mind?
Well, I just had in mind the 2-bedroom, 1-bath. And then we created a monster. We created an additional 2-bedroom, 1-bath above the 2-car garage, And so it was just crazy to see this thing. And then what's pretty cool about it is the downstairs for aesthetics, so it can conform to the other homes in the area. We decided to keep the garage door. So when people look at that and they drive into your driveway, they think the downstairs unit is a garage.
Yeah.
Let me open up the garage. And then, but once you go inside it, it's like, where's the mechanism to open? There is no garage. It's just aesthetically so it could conform to the other properties. I wanted to do that because it just will look like if I put the other windows right there where the garage door should be, it's just going to look at they converted that.
Well, remember we were talking about it the other day where that house down the street did that, and they covered it all out. They took the garage off. They looked like they were going to build something, but then we saw it the other day and it was a garage. So it looks like nothing really happened. They just made it look ugly for a little bit.
Yeah.
I'm just kidding. But, I guess one of the biggest questions that will come up, and I know this is the biggest for everybody, what finance did you use and why?
Yeah. So the way I decided to go with the finances, get creative, I took a line of credit on the property, but it was a construction loan. And because I already had a first of $150,000, okay, and that's all I owe on the property, because that's what I did subject to, even though I'm in contract for 680.
Yeah.
You know, but the agreement was I'm able to use the equity, even though it wasn't mine. It's realistically my mother-in-law's equity. I was able to leverage that equity to obtain an equity line for 410,000. Yeah, and that's how I was able to obtain the construction loan. So I had a first of 150,000, and then I had another loan for 410,000. And that one was a high interest rate because I have no experience in building. Therefore, the investor said, we'll loan you the money, but it's got to be at 15% interest only.
And, sir, a lot of people, that might be very alarming, high rate.
It is.
And, a lot of people will shy away right away. But what gave you the confidence to still go forward with it?
A lot of times it's you just got to do what you got to do. You see the numbers at the end of the day, what can be, because before you get any type of loan, we have to do an appraisal based on the future value of the build that you're doing. And how do we know that? Is with the architect paperwork, the design work, we give that information to the appraiser. Therefore, the appraiser is now going to go out there and provide sales comparables in the area that are similar in square footage, similar to bed and bedroom count of what you think you're going to do, even though it's not constructed, but they're giving you a loan on the future value of that.
And that's what I really wanted to get at, that there's not just, throwing darts in the dark. It's strategically planned. There's a strategy behind it, and you're calculating to, have an end goal and an exit strategy that, profits, obviously.
Exactly.
So knowing now what you know, if back then you knew, would you change anything on the financing or make anything different?
Well, with the financing, obviously, we're always looking for the best rate possible. But, in this case, with the lender, they believed in us and they allowed us to complete this project because of it. So if we really look at it, we built 1,820 square feet, and I want to break that down. That's between both units. The existing home, we didn't do anything there, and so, but what we did build was 1,820 square feet, 2 bedrooms, 1 bath in each unit. And if you look at the cost per square footage after we did soft costs are like your permits, your design work, that's all considered the soft cost. A lot of times we think, well, we go to the city, it's going to be pretty inexpensive. It came up to be like $40,000, just for that. And then plus your loan for 410, so you add all that. And then there's other things that will come up,
So where do you feel like most investors mess up structuring a deal like this?
The biggest mistake, and I say this because I've went through it, is not having a proper budget, not visualizing what else can come up, And so one of the things that I didn't pay attention on our budget was, first of all, the architect, we did 3 units and we only got 2 tankless water heaters. Well, Where's the third one?
Yeah.
Right? So where's the third? I missed it. He missed it. The contractor missed it. Okay. The other thing that I didn't see was the landscaping. Landscaping is very expensive, especially if you're looking at, hey, am I going to do artificial turf to just keep everything low maintenance, shut off the water, or am I going to do plants? And then if we do plants and we do trees and all that, will it be properly maintained? And then what's going to be the actual payment on water and who's going to cover that, since there's only 1 water meter, because it's very expensive to do 3 water meters for 3 separate units.
Yeah.
What we did and we're able to do was 3 meters, electric meters. So that way we don't have to worry about that. But now the challenge becomes, okay, how much water is a main house using?
Yep.
And then how much water will the other unit, and then how do you distribute that cost?
Yeah. And those are the little things that people don't think about, or that don't arise until it happens. Like, oh shoot, you're right. Well, I didn't know this was gonna happen. Nobody thought about water. Oh.
I didn't till we're going. It's like, who's gonna do what? But I mean, the good thing is there's always a formula, right? And the formula is gonna be in your monthly bill, so you have to take a look at that and see, well, the main houses has 4 people, 5 people. What's the average for that? And then if the people are gonna come upstairs and downstairs, for these units, how many people are going to live there, and then how do you account for that? So there's got to be a formula to figure that out. So it could be fair enough for all tenants.
No, and I love that. And I have to be honest, the deal could look great on paper, but let's be real. There's a lot of stuff that could go wrong. There's a lot of stuff that pops out of nowhere. And those are things that you just can't prepare for, but you kind of have to, in a way, be ready for.
Just like anything else.
So let's talk about what went wrong. We could always talk about the pretty. We could always talk about, the great stuff. But what do you think was your biggest mistake on this project? What caught you off guard? And, where did you lose time or money?
Gotcha. And I want to go there, but you did ask for an exit strategy.
Yeah.
So what I wanted to do is right now we're currently doing a refinance and we're doing a cash out refinance because this is how I get to pay back my mother-in-law for that subject too. Okay. So being that the property's in a trust, I trust her because the property's ours, it's family. So I also did that strategically and creatively so that I could avoid the increase in sales price. Right. And so if I bought it really for $680 and I put that in county records, my property taxes already go up. But because we put it in a trust and the trust, she put us as the beneficiaries, anything were to happen, I mean, we take possession of the property, but we're able to maintain the property taxes at that lower rate, And so that was one of the good things. But now what we're doing is we're doing a cash out refinance going through what's called a DSCR. It's a debt service cover ratio loan. So what that actually means is that rental income has to cover your mortgage payment. And if it's covers, for instance, if your payment's $7,000 and the rents are $7,000, you're at 100. In other words, you're even. That qualifies it. Okay. We can do loans under that, but then you have a no ratio, your interest rate is much higher. In our case, the great thing is my payment's going to be an interest only at $7,400, but my market rents are going to be $9,400. So I'm a little above the 120%, which makes it easier for me to qualify for this and get, anytime it covers more than your payment, then you get more favorable rates because of that.
So a DSCR loans, for people listening at home, is a loan that you're able to utilize to get a rental property and not utilize your income like your taxes or your pay stubs, but rather the projected income of that rental property or market rents, whatever it might be. And if it's renting for more than what the mortgage payment is, then you have a greater chance of the loan being approved.
That's it.
If that's not leverage, that's not leverage at its best, I don't know.
Trust is all I gave, is my paperwork for the trust. Gave the ID, and again, the trust is under my mother-in-law, so we have to put everything there. And then the other thing is just going to be, a bank statement just to show that we have some reserves or a retirement account. And then you run a soft pull on your credit. And the great thing about this, Brian, is when we do these types of loans, they're only for investment properties. They're not for your primary residence. A lot of times I get clients and say, hey, I want to do the same, but is the property your primary? Yes, difficult to do. Can't do that. We have to take a different creative approach for them.
I love that you bring that up because everybody wants to build in their backyard. Like I have those conversations with people all the time. They're like, hey, how can I get an ADU in my back? How can I construct this? But it gets so difficult when it's a primary. Anytime that it's an investment in your second home, like people are like, say, yeah, if it makes sense and it makes money, we'll give you the money.
Exactly. Because again, it's you don't have any income taxes. You don't have to prove when it's your primary. Then we have to, that's when the whole SAFE Act comes into place.
Yeah. Of course.
And now we have to prove income. We have to qualify. Like it's a lot.
One of the things I just wanted to drill home is that underlying fact that, you can do this. Like anybody can do this if you have, the cash, if you have the property, and it doesn't have to be like a crazy amount of money that you go through. No. But these are stuff that are out there for everybody to be able to take advantage of.
That's it.
Everyone has access to this.
Yeah, and I'm glad that we're sharing this because there's a lot of people here in San Diego. There's a lot of investors that like to use their own money.
Yeah.
I'm a big proponent that I believe we should use OPM, other people's money. In this case, the interest rate, yes, is 15%. I need to pay that off. If I pay it off, the rewards are far greater than if I didn't do that. If I looked and see when the rates go down or found that investor that's going to help me with it, it would have just held me back. And so now he gave me the opportunity to complete the project, going through the refinance, be able to pay my mother-in-law back all her money. So now we're doing a loan for $1.2 million. The house, the appraisal came in at 1.5. Well, we're waiting for it right now. 1.5, 1.6 it should be. And this is what we call forced equity, Brian. So when we look at these things, I'm in it because you asked where am I in it? We're going to be in it for like 1.2 mil. But that's with me when I put that $100,000 down. And if you do the math, it's like I recover that back.
Yeah.
And then I still have that money there. And now I have the rents that I'm going to receive. So $9,500, payment $7,400. it's not the best monthly income that you receive, but hey, you know what? $2,000 is not bad.
But I feel like, you took on the risk knowing, what could happen. We know that it was not going to be an easy way through it. 15% is scary. Some people would not even think about it. They'll just, walk away. But the purpose behind what you were doing it for far, far, far outweighed, the initial risk that was short
Yeah.
term, because you're looking at that long-term play. And I think that's what's very important for people to understand that's listening, that in the short term, it might feel a little bit tough. It might get like a little bit,
A little
rough.
bit.
A lot of it. We'll get into that. No, but what I'm saying, if the purpose is strong enough, then faith over fear.
Yeah. No, absolutely. Listen, you're not human if you're not fearful.
Yeah.
Honestly. That just means that, like, what the hell's running through your veins, right? But it's okay to be scared. It's okay to have that fear. What ifs? I mean, that's how we do things. It's a precautionary thing.
Yeah.
And so I was trying to be as cautious as I can.
Yeah.
And I was scared. I'm telling you, I'm still scared, because the properties are still not rented. And remember,
Yeah.
I was going with the long-term rent, but you were there a couple of days ago at the property. I'm trying to seek other avenues of other ways how we can generate more income. If we can go the short-term rental side of things, well, we already saw comparables. You can get $6,000 to $8,000 a piece for each unit.
Yep.
Versus $2,600 to $2,800 on long-term.
Yep.
And so the cool thing about the data around the area, it's all data. It's all there already, things that are already happening. I don't have to go reinvent the wheel. I just have to hire the right people to do that. So, and to answer your question, the difficult part of this, the most difficult part of this transaction was not having the proper project manager. That right there in itself is huge. The other problem was me not visiting the project as often. I try to go there once a week. The contractor would tell me one thing. I took his word, and
do you feel, because in your line of work, people trust you and you take that very honorary and you take that very passionate, that it's like, they can trust me that I'm going to get done what I said I'm going to get done in the time that I'm going to get done. And if it doesn't get done, there's going to be communication of how and when it's going to get done. Unfortunately, do you see that being a problem in, the community of, these types of projects?
yeah, that's where you hear the dun, dun, dun. That's where it came from, right? Because it's not getting dun, dun, dun. So, right?
Oh, you're so...
So that's where it really comes from. But absolutely, listen, your best partner is going to be your contractor.
Oh, yeah.
And I went through 12 contractors before I hired the contractor. Like, when you're asking the first questions for the first couple of contractors, you learn something from them.
Yeah.
And then I'm going to write that down. That's another question. Perfect. I hired the 12th contractor thinking, this is it.
Yeah.
We got this. Well, these contractors, I was the biggest project that they had at that point in time. But obviously, they use your project to show other people, and then that's how they are able to generate even more business, right? So next thing you know, it's like there's timelines because there's these monthly payments that come. The bank does not wait. And luckily for me, because I got the proper loan with the proper person, I did what's called an interest reserve. So what's cool about that, in my loan of $410,000, my payment for the $410,000 was $5,400. So it was $54,000 was already reserved for my payments for 10 months, right? So I didn't have to worry about payments. So I'm like, hey, how soon can we get this thing done? We can get it done in 10 months or less. Perfect, no problem. Let's get it done. Well, its project started August in 2024. Guess what? It just got done a couple months ago. And it's still not done. There's still a few little things, defects. Not everybody takes the same ownership that you think. For me, it feels like when you buy a new home, you go into a new home, everything's good. And then if not, I go to the builder and I put this blue tape all around the place. Like, you guys got to fix this.
Fix this.
In this case here, it doesn't work like that.
Yeah.
I put the blue tape, but guess what? Contractor never came back to see, hey.
I think we still saw a few blue tapes there.
They're still there. I just had to tell Maria, the person that helps me clean up my properties, hey, Maria, quítalos, take them off.
And I want to go back a little bit more to what you said about the interest reserve, because I think that's a very powerful tool that a lot of people may not know about. When can you use an interest reserve, and when does it come into play?
Anytime that you have enough equity for the project, for instance, it was $150,000 and I was really doing a loan for 360 to do the build. The rest of the 54,000 was for the 10 months of payment. So at 410, if you add the 150 and 410, remember the value had come in at that point in time before they were built at 1.4 and a half. So I was at a loan to value of under 60%. I think I want to say it was like 45, 50% more or less. So that's where it comes. So had I known that the project's going to take longer, I could do more of an interest reserve and not worry about it. But that basically eats up some of my equity too, And so it's not like it's just free money. It just alleviates it, allows you to focus on what you need to focus on. And it just gives you also that peace of mind. Well, the payment's getting covered. I don't have to really cover all that. So
yeah, it makes sense because I feel like a lot of people feel that, especially if they own a property that's a second home, an investment that they've owned forever, they're like, oh, I can't do it because I have to come up all money out of pocket.
Yeah.
But there is, cases that, things like this are able to happen so that you're able to take advantage of your equity and put it to work for yourself.
That's it.
Because at the end of the day, it's going to be an investment in yourself. Down the line, it will replenish, and, that's the end goal.
Yeah, exactly. Exactly, Brian. No, and I mean, it's forced equity is what we're doing. That you're forcing value for your property. And, it's cool because it's not leaving like half a block away from the Chula Vista golf course.
So it's so funny that you mentioned that. I was walking by there that day you were there, and, I just took a walk around the block and found myself a nice little golf ball, a little treat, a little Pro V1 Titleist, one of the best balls that you could play with. And I'm like, dude, you that's $5 right here.
Yeah. No,
so that's always nice.
Yeah.
So we got the real stuff out of the way, what happened, the good, the bad, and I actually just the bad, but, I want to get into what went right, the good stuff, this is what we're actually able to do, the stuff that gets you going, that gets people excited for. Tell us a little bit about the bright side of things.
What we did right for me, I feel that we did the proper financing. The proper financing, it was great that it allowed me to just be creative enough to understand what we're able to do. So that went very right. The other thing that went right was making sure that we got creative in how do we save money in the property taxes. That's also for me because we have such a strong relationship with my mother-in-law. That's right. You got to leverage your relationships and put them to work in a proper manner. So no one's taking advantage of anyone.
Yeah.
There's full transparency. So that's right. And I'm hoping that right now that we identify what route we're going to take, whether we go with long-term rents, mid-term rents, or short-term rents. Right now, it looks like the best gameplay because of the area where we're at, the short-term rent is going to be the game.
Yeah.
Again, I mentioned the lowest comparable was like $3,100 that you're receiving a month, but after cleaning expenses, I'm sure it's going to eat up your profits. But then that property didn't conform. Luckily, I get to see pictures. Let's see what does that look like, versus the one that's getting $6,000 to $8,000 a month. And so that just is hopefully something that's going to go right. I can't say right now it is, but it sounds like that's going to be the play.
Well, when you showed me the rents and I saw the fluctuation in the numbers, I was kind of thrown back because I was like, oh, like for both, right? No, for one. And although those numbers look great and, it could land in the middle, it could land, wherever it land, they're promising.
Yes.
And it gives you that hope that you're like, I did the right thing. I'm in the right place. Even though I went through what I went through, it might have took longer. But look at this. And if I wouldn't have gone through that, then I wouldn't have figured out that this could be done.
Exactly. And now the right thing that I got about that is don't just trust. It's like trust but verify.
Yes.
Okay? Trust but verify. So I got to trust what we're doing right now. And so, my props to Gabe. He broke everything down for me, but there's still questions. I just not going to just engage in the transaction, just sign contracts. Like, no, there's still more tools that I got to utilize to help me make the best decision. And so if I did see that, hey, we're getting 6 to 8, I got to know how much are you going to make? They're going to make 15%. They already sent that, but 15% of the gross rent. And then what are you going to subtract out of that?
Yeah.
Because that's where a lot of your profits get eaten up.
Fees, this, miscellaneous, this, that. Yeah, of course.
Exactly. But then at the same time, Brian, the positive thing about these things is we think we're going to go in a certain direction. Yeah. And then next thing you know, there's a detour because there's other options. And it makes you think when there's better options, it just makes you realize there's a different way how to take the approach on these.
And I love that you mentioned that because it's like we talked in our past episode of Friends of Mortgage Heroes with Eric from O2 Valle. When he mentioned, he's like, I was just going out to El Valle to go look at the little like A-frame houses. And then all of a sudden it turned into me having this whole different idea of what I had to do. And my purpose was actually like found. And I think that's the exact moment where you're like, well, shoot, I know that I need to be doing this. I know that I want to do this. Let me go move forward. But in the process of all that, you found the purpose that you were looking for. You're just like, I know I need to be here. This is what my calling called me to do, and now I just move with faith.
Yeah, exactly. Well, you move with faith and also with data.
Faith and data, baby. Faith and data.
So yeah, no, this is a new business venture.
Yeah.
And with new business ventures with the right people, again, it's gonna be like aha moments. Like, oh, I got it. So I already know what I'm good at and what I'm not.
Yeah.
And that's the best part of all these things. You got to realize those things. Like, am I good at putting the hammer on and going? Like, no, dude. Like, what are you good at? I'm looking at properties, finding properties.
Yes.
Financing. That's what we're good at. We get very creative and we try to figure this out and maneuver. This time around, it's like I'm looking for a partner that's gonna get the short-term rental, give me the true facts, so that I can do what I'm good at.
Yep.
And that's just what it is. It's just another person that's going to go into a utility belt that's just going to make you that much powerful and better at what you do. And then you get to pass that on to your kids.
No, I love that. And, looking at both sides, we talked about the good, we talked the bad, and, passing it on to your kids. So if you had to turn this into a playbook that down the line you got to, pass on to your kids or pass on to the people that you love or just people that you want to see succeed, how would that look like?
Oh my God, man. Obviously I would be very descriptive of everything that we're doing so they understand and they see it, and the beauty of this is the opportunities. Like my mother-in-law, I'm so grateful for, dad, again, passed away, but I know he's looking at us and just so proud of the moments, but I just want to pass this on. I just want to give it to more people and let them understand like how they can leverage their property. How does it look like? Like, it looks cool. It actually looks pretty darn cool. You got to see it from, the day they broke ground, and then when you see the garage and there's
frames,
no roof, it's just the
pounding and grounding, like reinforcing the foundation, feeling like everything's coming down. Like, dude, it's actually a work of art. Yeah, 100%.
Yeah, it's so rewarding. Especially, we were there. We got to be on the second story. We're just looking at. Obviously, my mother-in-law's dad lived like 5 houses down, so I get to see that, and it's just crazy. Like, grandma, what would they say right now if they saw this? Like, what the heck happened here? And then dad, like, how proud of this is going to be? Like, dude, look at this thing. Like, we get to see the golf course from above now. Like, this is pretty cool.
No, honestly, I love the view from the top floor.
Right?
Of the golf course.
That breeze.
Yeah, that's awesome.
That breeze. It's just so cool, man.
So get into a little bit more of a, well, you already mentioned how much the whole project cost, but just to kind of, reiterate, all in, how much did the project cost?
So the whole project with everything, even with my soft costs, permits, everything, I'm going to be in it for 1.2.
1.2.
Yeah.
And then where did you get the budget? How did you guys come up with the budget? How did you guys, make sure that you guys added the right figures? Because like you mentioned, that's one of the most important things. You got multiple budgets from different contractors. How did you weed out and know like, oh, this is the one that I think is going to be the one that works?
So everybody needs to start again with your architect or your designer. Okay. The architect and the designer, when you have those plans, you share that with the contractors. And obviously they're not going to give you a bid right there and then, but they're going to go ahead and analyze your bid, and analyze your design and see what all this is going to cost. So they get to see windows, where we're going to get the windows, where we're going to get the flooring, where we're going to get the bathtubs or no bathtubs. If you're going to hot mop it, like I did hot mop, I didn't do tubs. Are you going to do plastic inserts in your shower? Like if you're not going to do any of that, all that stuff needs to be put into that budget. And so then in addition to the budget, there's always these other things that don't come up. So you need to have a 10 to 15% contingency in there. That's one thing that my lender did not inform me of. Had I had another 10, 15% contingency in there, I would have been able to do like the yard, and I'd have to add a pocket. Well, not have to add a pocket for the yard, and I have to add a pocket for the additional water heater that wasn't installed. Instead
Yeah.
of going with the tankless, we had to go with the water heater. So like those little things right there come into play with that. But it starts with your architect.
So it sounds like your architect's very important. You got to make sure.
Very important. And then it's always very important to understand what can you build per square footage. You know, so that's the other thing, because you can go to contractors, you got to be upfront with them. Are you hiring them from Del Mar? If they are, they're going to charge you like $400 or $500 per square foot, and now there's no margin there, you know. And so I ended up building, I did the math, about $225 to $230 a square foot. That's including the soft cost and everything,
which is pretty aggressive compared to, you know, different numbers that I've heard, like
Correct.
350 up into the 400s. But it just really depends, and I feel like you couldn't have stressed it enough that your contractor take your time picking them and make sure that, you know, you really have your all your eggs in that basket. And
Exactly.
not, you know, because they can make you or
Exactly.
break you. But one of the things I did want to do is, you know, pay it forward for, you know, new investors or, you know, homeowners at home that are listening to this, past clients. You know, if they wanted to get onto a deal like this and they wanted to do something like this in one of their investment properties, second properties, or even the primary, you know, what would you advise for them to do first?
That's a great question. So for me, if you're a homeowner, do your garage. Start with your garage. Start with small and work yourself big. That's what I started with. You know, I want to have an understanding, what is it going to entail? What do I need in order to get going in the right direction? You know, and so I would start with my garage, because that's the most inexpensive route to take. And then that alone right there is going to allow you to say, do I want to hear all the hammers? Do I want to hear the jackhammering? Do I want to deal with the permits with the city, the county, or wherever you're at? That's right there where it really should start. And again, before you start anything, always talk to a designer or an architect. Have them come over, because a lot of times, you know, you think you have the visual, but these guys will really tell you what you can and what you can't build, or what you should build.
No, that makes perfect sense. And it reminds me of a conversation that I had at a networking event where, you know, they were advising homeowners. They're like, well, I want to do 3 units in the back. I want to do this and then eventually develop into that. And then the person was like, how many projects I've done? None. And they're like, well, the enthusiasm is great, but they're like, how would it feel if you're learning how to, you know, start a new business while at the same time managing a project that you've never done in your life? And then the person kind of say like, that makes a lot of sense. I would hate the headaches. They're like, that's why I would recommend to digress back, start with something small, because exactly what you said, you don't know the unknown. So like maybe you do it once, you're like, I would never do this again. Or you do it once, great. Now I can know exactly what I need to do next time.
Yeah, absolutely. And investors, a good thing with investors, a lot of them, they already have friends that are doing certain things. Yeah. So hopefully they know that they should be taking what routes they should be taking, well, or what steps.
So at what point did you feel like, damn, what did I get myself into?
You know what? That's a great question. I haven't felt like that.
Oh, that's good.
I haven't felt like that. I've been feeling more like, damn, when is this project done? Or damn, like what the... I don't know that I want to say that, damn, what got, like, why did I do this? Because I felt like it's something that should have been done. And because, again, I started in my garage and I saw a complete project.
Yeah.
And I've done other friends before I did such a big development like this. We already done, like, I've worked with probably like 10, 15 other clients. I've done their garage.
Yeah.
So it's easy, right? So it's like, why should it be harder to build something like this?
Yeah, I don't know, 100%.
So I don't know that I felt like, damn, I felt more like, damn, like, get it rushed so we can go into the next stage.
No, I hear you.
Because I want to do this more. I'm hooked.
That you know, it leads into my next session. You know, what's your next move after this one?
Yeah, no. So my next move is, how do we do this project? And, you know, being that I'm getting younger and younger, right? I get overwhelmed easy. So I don't want to take on a lot of projects. A few projects came, you know, about my way in the last, 6 months, but I had to refuse them because I can't take that much. I can only take so much. And so I'm one of those, like, let me complete one thing so I can move on to the next. Especially building is not my number one job. Yeah. You know, I'm here to originate loans and, you know, we're doing our business. So that's more like a side job type of thing. But what's next is like, how do I do this again? You know, again, we talked about I build at 230 square foot. Let's say we build even at 250, but in the area, the average square footage is selling between 450 and 500. So how do I do that forced equity and convert that? So now my next thing is my new buy box now is, how do I find a 2-bedroom home, 1 bathroom, 2-car garage on a lot that's 5,000 square feet or larger. Okay. So the reason for that is the way I look at it is because we know how to do fix and flips,
Yeah.
leverage other people's money. Okay. I want to build a better relationship with a new contractor.
Yes.
Give me a good budget. Okay. But this is my vision. My vision is to add an additional 3 bedrooms and an additional 1.5 bath. So therefore the property will be a 5-bedroom, 2.5 bath. Okay. The 2-car garage, we're going to do this, turn it the same way.
Yep.
A junior ADU, 1 bedroom, 1 bath with his own little kitchen and everything on a 5,000 square foot lot, giving us the option of later down the line building something that's going to be separate. Okay. The reason why I don't want to go detached right now so quickly is because now we have the new rules with the sprinkler systems requiring solar. So that alone is like anywhere from a $40,000 to a $70,000, $80,000 expense when you put the sprinklers and you do the solar. So I'd rather add to the property because I can take down a property, 2-bedroom, 1 bath. Let's just say 500,000.
Yep.
But if I make it and it conforms around the neighborhood, the community,
You could 2x that.
exactly. Now I'm talking, it's going to be just for me, it'll be a lot easier.
So, sticking on that subject, do you feel right now if you're a buyer here in San Diego and you're looking to, stay here long term, create your, build your nest here, do your life here, do you feel that maybe looking at a property where you could down the lines position yourself to strategize to do something like this is the key play to continue to be able to hedge against the higher cost of living?
Yeah. Again, if you're, obviously you know the enthusiasm.
Yeah.
You really do. And you need to just be a person that's going to take the action and will get it done. Because, you're also going to a 2-bedroom, 1 bath. And let's just say most people that are here in San Diego do have a family.
Yeah.
That might be a little tight, And so sometimes being that it's your first home, that may be a little difficult. That's my opinion. Start small. Start with a 3-bedroom, 2 bath, 2-car garage, and convert the garage and start with that. That alone, here in San Diego, you can rent anywhere from $1,600 after it's done to $2,200.
Yeah.
1-bedroom, 1 bath garage. And I mean, we're talking about these garages look good after it's done. It looks like you go in there, it's like, damn.
Hey, shouts out George. I mean, look at his.
Exactly.
And it didn't take that long. I remember you told me like a month ago, and you're like, he showed up the other day. He's like, hey, look at this. And I'm like, wait, what? That was fast.
Exactly. So leverage the space that you already have. Because just imagine, if you have a mortgage on average here in San Diego is about $5,500 to $6,500.
Yeah.
Okay. But you're paying rent in 2-bedroom, 2 bath around here, it's going to be like $3,400 to $3,600. Okay. So how do we get to that? Well, if I put anywhere from $60,000 to $80,000 to convert my garage properly with permits and everything, and I add the square footage, now I'm adding more value to my home. That's the next thing. But I rent it for $2,000. All of a sudden my 55 went to 35, conforming more to what the rents are. That's with the high interest rate environment right now.
Yeah.
When the rates go down, guess what goes down?
You refinance.
Yeah,
Your
you
payment
refinance, your
profit
payment goes down.
up. Your profit goes up.
And then every year in California, we can increase our rents by 10% max. I mean, let's just say you're a cool landlord and you go 5%.
Yeah.
Your rents will continue to go up.
And how you mentioned multiple projects, and now you went in $410K, right? Imagine telling that to somebody that just started. Hey, your mortgage is maybe like $600,000, but then on top of that, you're gonna finance another $400,000. Compared to a 60 to 80K, you can easily, get a loan, line of credit, take from retirement, because it's going to get replenished. And if you do the math, you'll probably be able to break even on that a lot sooner than you think.
Absolutely.
And then from there, it's replenished.
Yes.
Now you're like, okay, I have this producing income for me. And you
Yes.
didn't have to go and become a huge developer, huge architect. You just had to take that action.
Exactly.
Follow a plan and just trust that it's the right move.
No, absolutely. The cool thing about it is they call that the cash on cash.
Oh, I like that.
So the cash on cash is how much money did it take me to put that, to build this ADU? Let's just say it costs $80,000, right? But your rents are $2,000. All you have to do is go $24,000, divide it what it cost you, and it gives you a percentage. That is your cash on cash percentage. A lot of times we have retirement, it's only earning 5-6%. Well, your cash on cash was going to be anywhere from 20 to 35% return. That's a great investment. I'd rather go with a sure thing there than the what ifs and maybe even taking a loss on the market.
No, 100%. And, I love that because that's what real estate provides for everybody. There's multiple ways to skin the cat. There's multiple avenues. You just have to find the one that works for you and then go ahead and take action and attack.
That's it. Yeah, action's everything, but it is scary. And being with the right people is everything. It's everything. I mean, even in life, Brian,
Yeah.
tell me, there's a saying in Spanish, dime con quien te juntas para decirte quién eres, right?
Yeah.
In English is tell me who you hang out with so I can tell you who you are.
And it's so
you
true.
have to go listen, I'm with Pace Morby. I'm with Ty De Leon. Shout out to my boy Ty.
Chris,
I'm with
Rich
Rich
Summers.
Summers. I surround myself with winners, people who are like me that we thought we couldn't do things yet. And some of these guys are doing it they're just taking it to another level. I don't have that energy to take it to that level, but I have enough energy to let me just do it at this time. Once I have the proper support, I may rethink how I'm thinking right now and just try to take it to another level.
But you know what? I'll add on to that. I feel that, I get motivated by seeing other people that are way above me. And I'm like, well, I can't go that hard, but I can go as hard as I can in my own
Correct.
world. So touch your limits. Your limits might be different than somebody else's, but reach your own limits.
Exactly.
Know what you're made out of.
Yeah, pick your heart.
Yeah.
It's
Pick your heart. Pick your heart.
Pick your heart. That's it.
I love that. Well, I can go on all day. I'm
Same.
sure we're going to have way more updates, way more projects to go over, way more stories to break down. And before we get off, is there anything that you want to highlight, that you want to drill home, that you want to just emphasize that, we didn't touch?
No, Brian, I just want to say thank you so much. Obviously, you came up with this information. I think it's very valuable. If one thing we do here at Mortgage Heroes and one thing we do even in our personal life is we're always trying to give back to our community. We always want to make our community stronger than what we are. And knowledge is power when applied, right? Yep. And so if there's anything that we can do to help these homeowners or these investors apply that knowledge, we're here to help. This is what we're here to do, is we want to make sure that you guys are doing this projects because that motivates us to want to just stay in line with it and maybe do even more.
No, I love that. Well, you couldn't have said it any better. And that's all we're here to do. We're here to be your guiders. We're here to help you out. So reach out, and thank you so much for everybody that's been, joining us, listening to us, subscribing, and please make sure to turn on your notifications so every time we drop an episode, and subscribe. Thank you so much. We'll see you guys on the next one.
Let us know if you have any questions.
Later.
See ya. If you like this video and like to subscribe, click here. And if you want to watch other videos, click here.